Good morning. It's Monday, the 18th of March, and this is Govindraj Ethiraj broadcasting from Mumbai, India's financial capital. Our top stories and themes of the day at the top. India's stock markets are now idling at a turning point. Foreign institutional investors are back with a bang. What could that mean? India makes a fresh pitch to Tesla, though it might be late. Iron ore prices are falling and copper is rising now. What is the most important economic issue facing some 970 million voters as India goes to polls on April 19th? And the inherent conflict of Indian promoters buying electoral bonds.
This is a core report with Govindraj Ethiraj.
The stock markets idle after the turning point. Last week was a turning point for the stock markets in a way because of the clear separation now between large cap stocks and small cap stocks. While the market regulator, the Securities and Exchange Board of India, has been issuing warning after warning for several weeks, the markets have now begun reacting. Also, after it emerged that some of the funding going into the middle of the market was somewhat dubious in nature. Before I come to small caps and the rest, let's pick up on Friday. The BSE Sensex ended about 454 points lower at 72,643. And it lost about 2% that week, while the Nifty 50 closed down 123 points at 22,023. Now, Wall Street, which could provide some direction for Asia today, was also weak. The S&P 500 fell on Friday for the second week consecutively, with technology stocks obviously coming under pressure. Other indices like the Dow Jones and Nasdaq Composite were all down, as were the tech shares like Amazon, Microsoft, Apple, and Alphabet. Tech favorite Nvidia seesawed and ended lower on Friday, but was up marginally for the week. Now back home, the Sensex and Nifty, as we said, have fallen 2% each. I mentioned Sensex, and that's the case with Nifty too. But the BSE small cap and the BSE mid cap are down about 6%. Sectors like energy or oil refining companies were more hit because of a reduction in fuel prices by 2 rupees per litre in petrol and diesel, which affects their margins, and we'll come to that in a bit. But small caps are the hardest hit, with Money Control estimating that some 9 trillion rupees in investor wealth has been lost due to this market correction since the 19th of February, accounting for more than 50% of the total value destruction. So that's in a month's time. From April 1st, 2023 to February 19, 2024, the BSE Sensex posted a gain of about 24%. The BSE small cap has been up 71%. And that's the contrast that we've been seeing and, of course, pointing out for the last 3 months or so. Small cap and mid cap are, of course, broad brushes, and there is reason to be wary of stocks in this segment, also because of the mutual fund stress test directive, and we'll come to that shortly as well. But as analysts like G. Chokalingam told the core report last week, he welcomed the sharp corrections in the smaller cap segments because there were good stocks in them and patient investors would return, while the antsy ones would obviously exit. Elsewhere, oil prices are now over $85 a barrel at $85.34. Now, this is still roughly within the band that we've been seeing in recent months, but clearly on the higher side. Now, higher oil prices are obviously a matter of concern for countries like India in general, and now in specific with access to cheaper Russian oil diminishing. Oil stocks, as I mentioned, are already weak following a reduction in selling prices of refined products like petrol and diesel. Foreign institutional investors are hitting the accelerator. Just when everyone else is going easy or having second thoughts about segments of the market like small caps and mid caps, foreign institutional investors have bounced back and quite strongly into Indian equities. And that's usually a good sign of things to come. Foreign portfolio investors have bought shares worth about 40,000 crores in just the first 15 days of March, according to depository data quoted by PTI. Now, you have to see this number in context of February and January. In February, foreign investors bought only about 1,500 crores worth of shares, while in January, they sold about 25,000 crores worth of shares. So the reason that's being now attributed is how bond yields in the United States are moving, which have been low, though that's changing. On the other hand, foreign portfolio investors are continuing to buy into debt, and this number is expected to rise further. Investments by foreign portfolio investors in the Indian debt market so far in the current calendar year, that's 2024, has already hit about 45,000 crores, or 66% of all debt investments, which stood at about 69,000 crores in 2023. So, 66% of all debt investments of 2023 have already come in 2024. Elsewhere, India's merchandise exports rose 12% to a 11-month high in February of about $41 billion, while imports increased 12% to a 4-month high of $60 billion, led by gold imports, which rose about 133% to $6.1 billion, the Economic Times reported. The export surge was driven by engineering goods, electronic items, and pharmaceutical products, and the trade gap has obviously risen now to about $20 billion. A stress test for small cap mutual fund investors. It's an interesting mathematical and perhaps even sociological experiment, but grounded in real money. The Securities and Exchange Board of India, responding to overheated small and mid cap stocks, issued a 15-day disclosure directive to ascertain how soon a fund manager would be able to liquidate holdings based on recent trading volumes if investors were in a hurry to exit positions thanks to adverse market conditions. So it is hypothetical, but that's only in a manner of speaking. So the calculations are real and perhaps useful to see, though the precise impact I'm assuming is a little tough to measure unless and when it really happens. The objective of the stress test is to actually make the retail investor aware of potential risks and impact of market volatility on the liquidity of the scheme. The six largest small schemes would need more than 20 days to liquidate half their holdings, according to the business standard. For mid cap funds, the time required to sell half the assets of the top six schemes varied between 7 and 34 days, the business standard computed. State Bank of India Mutual Fund, which manages the third largest small cap scheme with a corpus of about 25,000 crore, said it would take 60 days to sell half its assets of the fund and 12 days for a quarter or 25%. Now, all of this is obviously tough, and I'm not sure many investors, particularly those who've been charging in the last year or so, would really care. If prices fall too soon or too fast, as they already have, they would exit or go easy for some time or pull back. And this has happened actually before many times and for the whole market. On the other hand, the stress test for mutual funds is also a stress test for investors as they wonder and fret and maybe get sleepless nights about what could happen and if their mutual fund would protect their investments as opposed to all of it happening at one shot and no one being the wiser. India makes a fresh pitch to Tesla. The Indian government is not giving up on bringing Tesla, the electric vehicle major, to India, as we've been discussing here. In the latest move, the Ministry of Heavy Industries on Friday announced a new policy to bring electric vehicle manufacturing into the country by now imposing lower import taxes on some electric vehicles for companies who commit to invest at least $500 million or more than 4,000 crore rupees in a manufacturing plant within 3 years. India will reduce import duties for such electric vehicle makers to 15% from the current 70 to 100% on vehicles having a CIF or cost, insurance and freight value of about $35,000 and above for a period of 5 years after the approval letter is given by the government. There is a limit though, you can only bring in 8,000 cars per year. Now, this would mean that the car would be worth 30 lakh rupees before it appears at dealerships and showrooms. Road taxes, I'm assuming, would take up prices further. Now, this is obviously a small segment and reflects in some ways the clout of the Indian automotive players, both domestic and foreign, in ensuring a level playing field, which may or may not have come had they not put their foot down, and Tesla could have got away with much more. At this point, of course, Tesla does not seem to be in an expansionary mode, as we've been pointing out, and there are still competing offers from countries like Thailand on the table. So, we will see. Maruti Suzuki chairman R.C. Bhargava told Business Standard he was comfortable with the new policy, saying cars over $35,000 was a very small market segment, even in the entire ICE or the internal combustion engine space, and even more so in the electric vehicle space. Also, he said it has restricted the number of cars that can be imported to a minimum, which again won't impact them. To a specific question, he said he was sure the Europeans, Vietnamese, and Tesla would come to India under this scheme if they saw a market. Mr. Bhargava, however, pointed out that EV makers had to actually grapple with other challenges, such as whether India has enough charging stations for customers to feel comfortable about the range, sale value of the second-hand electric car, what the gap in price between ICE and similar EV models is, and will that get neutralized by lower operating costs, according to Business Standard. Experts who've been appearing on the core report have also now pointed out the rising concern among Indian buyers over the resale value of a second-hand electric car, or rather the sale value of a second-hand electric car, and the secondary market in general. Quite simply, if I buy an electric car today, will I be able to sell it 3 years later or at what price? By the way, hybrid cars, as we've been pointing out once again, sell more than electric cars in India. So, back to the policy, it allows all international players, including Chinese manufacturers, to qualify for a duty reduction provided they establish manufacturing facilities between, or rather within 3 years, and achieve a localization level of 50% by the fifth year of operations in the country. Currently, fully assembled or completely built up, or CBU vehicles as they're called, priced at more than $40,000 attract a 100% tax. Those priced below $40,000 are subject to a 70% tax. Completely knocked down units that require reassembly in the destination country already attract a 15% duty. Meanwhile, in another indication of how the electric car market is shaping up globally on the demand side, or at least in the United States, car rental giant Hertz is replacing its CEO following what Bloomberg is calling a disastrous bet on electric vehicles that the company began unwinding in recent months. Hertz had announced last year it would order about 100,000 vehicles from Tesla, sending Tesla's market capitalization past the $1 trillion mark at that time. The first domino to fall was when Tesla cut prices to keep growing vehicle sales, which in turn caused resale values to fall. And this was just after Hertz had added tens of thousands of Tesla cars to its fleet. By December, Bloomberg says, Hertz started selling off some 20,000 electric vehicles, or about a third of its EV fleet, as we had also mentioned in the core report earlier. Germany's sixth SE, a leading car renter in Europe, is taking even more drastic measures, phasing Teslas out of its fleet completely, according to Bloomberg. Iron ore prices are crashing. Iron ore futures fell below $100 a ton for the first time in 7 months, mostly thanks to investors betting on the fact that China's property crisis will unlikely resolve itself this year, keeping steel demand low, according to Bloomberg. Iron ore, a key input into the making of steel, has fallen more than 30% since early January, and loss-making steel mills are buying less ore and stockpiles are piling up at Chinese ports, according to Bloomberg. Interestingly, India and Indian companies like Vedanta and NMDC export iron ore to China. An article in Business Line in late December said, and I'm pretty sure, unless you really follow this, you would not know it, that nearly 95% of India's iron ore shipments have gone to China, having risen quite sharply in the last 5 years. To be fair, it used to be high in the past as well. India is now a net importer of steel, reversing a 3 year record. Over the last 5 years, like I said, exports to China from India have gone up sharply. According to Bloomberg, Chinese steel mills are starting to announce production cuts as spot steel prices are falling. And this is a reversal from 2023 when iron ore outpaced base metals and other commodities to grow almost 20%. Interestingly, while iron ore prices are falling, copper is now rallying above $9,000 a ton as supply cuts have hit the market. Copper rose about 5% last week after being dormant for several months. And copper, as we've been talking about on the core report, is a key ingredient in electric vehicles and renewables, both being growth sectors. What is the key economic issue for a billion voters? Nearly a billion people will be eligible to vote in India's general elections, which will be held over 7 weeks starting next month, that's April 19th. The elections for 543 seats in India's Lok Sabha, which is the lower house of parliament, will run in 7 phases, with several states seeing multiple phases within them. Results will be announced on June the 4th. More than 2,400 political parties are likely to put up candidates, reported Reuters. Almost 970 million Indians are registered to vote at over 1 million polling stations across the country. Of this, some 497 million are male voters and 471 million are female voters. And the number of first-time voters is around 18 million. And this figure was about 15 million in 2019. In all, there are about 197 or close to 200 million registered voters in the age group between 20 and 29 years old. Women voters are important for several reasons, and we'll come to that shortly. Votes will be cast via electronic voting machines, which have been around now for about 40 years, and there will be some 5.5 million voting machines across the country. Every voter should be or ought to be within 2 kilometers of a polling station, so registered voters will be able to find booths close to wherever they are. So, what is the one economic issue that's likely to dominate the voter's mind, whether veteran, first time, or by gender? And how will that play out against other issues playing on voters' minds even as they cast their ballots? I reached out to veteran economic journalist and New Indian Express columnist Shankkar Aiyar, and I began by asking him what he felt was the most important economic issue at this time.
Well, Govind, we know that micropixels basically define the macro picture. So India, on the face of it, is the fifth largest economy. It's the fastest growing economy, and it's the most talked about economy in the global arena. There are issues that haunt it, which sort of impede its rise to the developed economy status. And these issues are primary education, primary healthcare, what we do for the agricultural sector, how it is to be liberated. There are also the unplanned urbanization and the state of cities and towns, which is visible in the water shortage and other things that we witness in Bangalore. But the big issue, really, Govind, is going to be employment, unemployment, job creation, whichever way you want to sort of look at it. Every opinion poll in the past 2 years has flagged unemployment and inflation as the main top two concerns. Actually, inflation adds to the idea, because of the gap in job creation. And the government has put out several pieces of statistics to argue that there has been job creation. But evidently, there is a gap between what is needed and what is available. So, job creation or how jobs are to be created, the unemployment story, this will resonate throughout the campaign. And I think if we look at the voter configuration, we have about 970 million voters. Of this, about 18 million are first time voters. The median age of India is about 29. So we can assume that a large part of the 970 million would be young people who are entering the job market or who are in the job market and face anxieties.
Right. And do you feel that this is any way different from what it could have been, at least for this demographic, from the previous elections in 2019?
So if you look at it over the last 3 or 4 general elections, first time voters have voted both on a quotient of aspiration and anxiety. So if you see the large number of voters who went with the BJP in 2014, it was about a sense of anger and anxiety at what was happening in government, the corruption and all that. There's also a question about what about their future. They are asking this question. It's on their minds when they enter the polling booth. And so if you look at the general employment picture, in the urban area, you have this whole new thing about generative AI. I mean, the NVIDIA chief is saying that AI will kill coding. The NASSCOM chairman says that AI is a risk to BPOs. There is a clear study by Accenture on how generative AI will shrink human interface. These are anxieties faced by the urban voter, the urban youth. If you look at in another perspective, we produce about 1.5 million engineers every year. And this year, the campus recruitment has been rather poor. It is the same story for MBS management graduates. So there is a certain angst in the system which will show up in the election. Political parties are aware of it. I think there is also the rural economy where the rural youth, who may or may not have land holdings in the family, is concerned about what is happening to agriculture, viability, the income that comes from agriculture. So they would be looking for some sort of welfare, and they are primarily looking for government jobs because those with land holdings are looking for a steady source of income because agriculture is highly risked in our system.
Right. So we've almost got similar numbers of male and female voters. I mean, the male numbers are slightly higher. So how do you see that? I mean, do you see gender responding differently on, again, to go back to the primary question on economic issues? So it's about 490 million male voters versus about 470 million female voters.
And mind you, Govind, in a number of states, the number of female voters is higher than the number of male voters. The turnout of women voters has also been higher and has been rising, which is why we have coined this. I wrote about it this some weeks back. I call it the W factor, which is the winning factor for political parties. And this was visible in the state election, assembly elections also, where the direct benefit transfers, cash transfers to women, number of schemes that the BJP has been wheeling off to people, from toilets to homes to gas cylinders to drone Didi and Lakpati Didi. All of this is meant to tell the woman voter that their best interests are being looked after, or their interest lies in voting for the BJP. And the opposition is also pushing this. Almost, I think, if I'm not mistaken, about 9 states already have cash benefit transfers for women voters. And this ranges from 1,000 rupees to 1,500 rupees. And there are all kinds of Karnataka is called Griha Lakshmi. In Madhya Pradesh, it's called Ladli Behna. Chhattisgarh has another scheme. Delhi government announced one recently. I think this might end up as a national program in one of the manifestos.
Right. So the other question is, we've talked about urban, and you talked about urban and maybe more technologically oriented jobs, which would be affected by disruptions like AI and so on. What about rural and agriculture, in as much as those who are in agriculture as opposed to those who want to get out of it?
But the family budget in rural India functions on two income streams. One income stream is really what they earn from the land holding, or if they are tenant farmers, what they make out of it, or if they are laborers or contributors to the farming, what they earn from it. The second stream of income is basically the circular migration that we see in India, where the person either goes to an urban infrastructure project or construction in the cities and comes back to the village. These two revenue streams are not sufficient, and there is distress, and which is visible in the rural consumption data across the last 4 quarters. And it's not that the government is unaware of it or the opposition is unaware of it. There are 7 schemes that have been put out to bridge the viability gap that exists in agriculture. The problem is that all of this is mostly band-aid. What agriculture requires is backward and forward linkages so that it operates in a more perfect market. Just now, agriculture is under license Raj, and it's caused by the imperfect market. And this imperfection is visible, Govind, in the rural consumption data and also in the food price inflation. So those people in the rural economy are looking for a steady source of income, which is why you see this sight of 4.8 million people applying for 60,000 jobs, government jobs.
So we started off by asking, what is the most important economic issue facing citizens as they cast their ballot? My concluding question is, what is, in your mind, the hierarchy of economic issues versus other issues? Without getting into the other issues, but is the economic issue going to be the most important in your understanding or feeling as of now? Or is it one of, let's say, 3 issues which will all matter as they vote or cast their votes?
Unfortunately, I don't think the electoral system is incentivized for voters to think about on the electoral system. The way we have it here is focused on merely economic issues. Well, this is true of other countries also, but more so here, the emotive issues sort of dominate the economic issues. I mean, if the economic issues had to dominate the intent of voting or the bias for voting, then we would have been in a much better place much earlier in our development history. I think emotive issues are primary. And, I always say that the two things that change voting intent in India is the behavior of the political party and the behavior in the economy. So the behavior of the political party in terms of if it's very corrupt or if they stamp down on basic freedoms, then there is a risk to that party. And in terms of economy, if you are feeling well-being or well-being is affected, then people vote on that. But emotive issues are the primary driver of voting intent.
Right, Shankkar. Thank you so much for joining me.
Always a pleasure, Govind.
Electoral bonds, why promoters and companies are inseparable. When I pose this question, I mean, should it be the company or the promoters? Before I come to that, a quick background. Electoral bonds were introduced by the government in January 2018 as a means of anonymously donating to political parties via the banking system. So, a legitimate way to donate, but preserving confidentiality. The Supreme Court then blew the scheme open last week by making the State Bank of India, which manages the scheme, disclose all the donors and the amounts donated. That process and everything that it's revealing is still playing out. Now, India is a family run business country like most of Asia. That also creates peculiar situations where the interests of the promoter or the founder who holds a considerable stake in the company and the company itself may be tough to separate. Even if the stakes are not considerable, the interests are completely interwoven and the company in any case is controlled by them. Now, let's take the case of two instances I picked up from reports, including from the Reporters Collective. In the first case, a company that's clearly affiliated to Reliance Industries called Quick Supply Chain bought 410 crore rupees of electoral bonds between 21 and 24. The second was more intriguing and involved a company called Infina Finance, half owned by the Uday Kotak family and the other half owned by a subsidiary of Kotak Bank, a listed and profitable company and bank. Now, this entity bought 60 crores rupees worth of bonds, according to reports once again, between 2019 and 21. Now, in both cases, there was a clear distance created from the main listed entities. Now, there are some questions on where the money that these entities put into these electoral bonds came from and what it was linked to, or whether it was linked to something else, but that's not germane to this discussion. So, in the case of Reliance and Kotak Bank, whose interests were these purchases of electoral bonds? It does not really matter to which party they went serving, the company or the individual promoter. So, in the case of Kotak, the alignment is clearly with founder Uday Kotak. In that case, what could be the benefit of first buying these bonds and that too in such a distanced manner? The question could be a little more philosophical. What is the benefit to the individual here that is distinct from the company or bank? It's not like Uday Kotak would seek favors that are distinct from the bank he founded. Or did he? Ditto with Reliance. Now, the amount is too large for someone to say that they did not know about it, like a crore or two from some subsidiary company for a very regional context. In the case of Kotak 2, the amount is quite significant, at least contextually speaking. So, my question is if they were to buy electoral bonds, and that's actually fine, why did they not do it through their primary listed companies since they're all profitable and the amounts would not really make any dent? Would shareholders quibble? Maybe, maybe not. But then for how long? Would the boards resist? Maybe, maybe not. Actually, I would think it's unlikely, considering that most of these promoters have considerable control on their boards. So these transactions, for sure, protect the primary listed company from any scrutiny. But they don't protect the founders or promoters, and surely from the eyebrows that are being raised. And to the extent that the two are inseparable, they don't protect the company either. At least that's the way I see it. And I'm not sure that there is any other way to see it, at least in India. So, whichever way electoral bonds go, companies should feel free to buy them and then declare them transparently to their shareholders the moment they do, as they've done in other forms of political donations, at least in recent years. And that's all that matters. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.